Good morning. Join me if you don't mind. Father, we just thank you today for the participants that are here. We ask you, Lord, that you would just lead us and guide us into wisdom and knowledge and understanding for the changes that are taking place within our culture. And we thank you that you're leading us into a new way, a new opportunity, Father. And I just ask you today for relationships to be built here, Lord. And I pray that you'd pour blessing upon us and give us the understanding, Father, of what we need to transform our culture. And I do this in Jesus' name. Amen.
Thank you very much. My name is Tabalo. We're presenting the Fort Worth Innovation Forum on behalf of the Fort Worth DAO. I founded the Fort Worth DAO and lead the DAO along with Dennis O'Neill here, which will be one of our panelists. The DAO's mission is to bring smart digital citizens, and we use this by our understanding and knowledge of cryptocurrencies, Bitcoin, blockchain. The technologies involved in that can get technical, but today we're mainly focused on the convergence of it, the evolution of it. And what's going on now is capital markets and a lot of big picture strategic problems are happening in the United States. Actually, this financial innovation is one of the few and arguably only ways that can actually extend time on this plumbing from a geostrategic perspective. I'm presenting this educational brief on behalf of my company. So my commercial work is I run a company called Yeedom, and we provide high quality, open source intelligence reports persistently and agentically. So I have machines do it. I have AI agents do it in latest Stanford research fashion. All right, so the first thing to understand is how the US inherited the system we have today. So the modern banking system was invented in Italy, in Florence, Italy. And that was the birth of what slowly evolved into the banking empire we inherited in Europe. The key point to highlight here is the super cycles that are involved with the European nations and royal houses that were running this on a global trade level that ultimately inherited to us. So the US regime primarily got started around 1921. The average lifespan is 94, and then we're at about 104. And I'm also Spanish, so I want to make note the Spanish had the longest global empire. So these are key details, okay? Because this is going to start seeding about what's going on today, and particularly post-COVID. So in 1933, there's main primary acts that happened. You can see it up here, but it's the Securities Act. I'm forgetting the other one, Glass-Steagall. But these are the main things that established the SEC, the FDIC, and these are the main investor expectations you talk about and that investors expect, and this all happened after the Great Depression. Fast forward to Bretton Woods. That was the formal death of the British global currency. And then there was the Nixon shock. So Nixon began the birth of depegging the US dollar from gold. That sort of laid the groundwork to the foreign policy that allowed the petrodollar. Fast forward, there's a lot in between there that happened in Japan and England, but we're not going to go into that, but it is related since it's global. We went into 2008. What happened in 2008 was that the big banks needed a bailout. So they got bailed out by the government. So dot-com bust was investment banks needed a bailout. Big banks bailed out them. 2008 is big banks got bailed out by the government. So now we're at a sovereign debt problem. So the groundwork is that if something goes wrong, it's actually the US government that's going bankrupt. And I forgot to talk one point. And actually at the very birth of Bitcoin is encoded a block. It says, the Chancellor of Germany is on the brink of a second bailout. So Bitcoin was birthed through the very intent to not have to trust these institutions that are failing the West. And since that time, we've been operating in near what's called like a ZIRP environment, so a zero interest rate policy environment. And that's led us all the way to the post-COVID. And post-COVID is where things really started getting out of whack, where you just can't ignore the math. The math is very, I think you could probably ask a talented elementary school student. They could probably make sense of it. And then now we're in the internet native era, but our capital markets are still based on these regulatory regimes that happened in the 30s. They're not internet native. These are old protocols. A lot of the technology involved, like you're just talking under the hood, is really just secure file transfers in weird formats. It's not native. And that's what we'll go into. I keep forgetting I got to click over here. So most people are excited. I know I am. I've made a good amount of money on my stock returns. I've tripled my stocks the past 3 times, the past 2 years. And one thing that's very key to understand is it doesn't actually fulfill me, because I understand that if you price our equity markets in gold or Bitcoin, we actually haven't gotten anywhere. So this is all just accounting magic in terms of true value. A lot of this is just, again, you inflate a currency, you print money, everything goes up. And of course, asset holders, securities are the primary capital flows to that. So if you can see here, mainly what we're showing is in dollar terms, the stock S&P did great. Bitcoin in gold terms, what is the actual value? What value have you accrued? And it's important to actually tie that more from a less than a financialized lens, but actually look at your community, look at your cities. Fort Worth, we're lucky and we're grateful that it's good here, but if you go to Dallas, Houston, I was in London earlier this year. It's gotten way worse since when my sister was in university. It's very clear there's a cultural decay in a lot of the Western citadels. So what's happening now, in just more recent terms, the plumbing is breaking. So the Federal Reserve, post-COVID, they started establishing all these new, you can just call it state-sponsored capitalism, open market purchases. So you're talking about the central bank buying directly mortgage-backed securities. They're buying directly. They started buying high-yield corporate debt. That was actually one of my big first learning of macroeconomics. I was like, okay, I learned the short of real estate. There's going to be a big short. This is all cycles. I was like, corporate debt was the big one from after 2008. And I was short. I was like making money. And then the Federal Reserve broke the Federal Reserve Act and started buying those corporate junk bonds directly. And that was my first lesson about how this stuff actually works, because the Federal Reserve Act didn't matter and nobody really cared. So what happened after 2019 and slowly into 2021, that was actually announced through the Federal Reserve Bank of Dallas, was a stand-up of what's called the standing repo facility. So there's going to be a net new one of these that happens, but basically you're just talking about overt central bank purchases of assets. Okay, so today is November 20th. This is end of October. So end of October, month-end close was one of the largest standing repo facilities from that new facility post-COVID that spiked overnight. You're talking $50 billion short liquidity that only Federal Reserve member banks get the plumbing to, and then whatever sort of swap lines occur to banks outside of the central banks outside of the U.S. out in New York. And the key here is that if we know this is going to happen, and we know that this is occurring, but like one thing is like, oh, Bitcoin's price is down. The whole point of this is to understand our culture and society beyond just dollar psychology. The premise is that it's just a math formula that dollars are denominators. They do work. That's not going to change anytime soon, but now it's going in this lens of stablecoin. And if my clicker will work again. We're having technical difficulty. Okay, wait. There we go. All right. Again, another chart here to show how it's just stable, and then you have these. This is very recent. So there's even whispers now that there's recent backdoor meetings occurring with central bank, Treasury Department members about what's going to be the new acronym they use to just basically do like Chinese level asset acquisition at the federal level. And by the way, the Federal Reserve is actually not federal, and there are no reserves. It's a little fun fact. So it's actually a private bank. Okay, now we're going to transition to gold. So most people don't worry about that because they say, oh, we have gold. I like gold. I still think gold is good. I'm not against gold. I support gold. But if you can touch it, the paper stuff and the Wall Street stuff, it'll last, but at some point it's musical chairs. And it's actually price fixed in London, and now the Chinese are pressuring us to actually deliver this metal. That's what's happening recently. So to audit gold or audit Fort Knox, the point here is to show how operationally inefficient and irrational it is in the information age to actually do that. So you're talking 18 plus months of work. How do you actually test every ounce of metal in there? Who knows? On the Bitcoin blockchain, it's audited and verified every 10 minutes. Programmatic scarcity, actual energy, actual oil used to synthesize that Bitcoin. And that's a key point. It's like stored energy in a similar way that gold gets refined. Okay, another trend that's happening in our financial markets is there's this blur between financing and investing. So if you were to ask a fifth grader about Boeing has lost over $7 billion plus a year for the past 8 years, I think, or so. Why is their stock worth any money? If you ask a fifth grader if that's worth anything, what would they say? So we make these complex reasons about why price discovery can happen, and a lot of this is just due to the inherent structure of our markets are actually just passive flows and quant flows by institutions. So this is Vanguard, State Street, BlackRock, that have mandates to buy all the shares, and they can just issue shares and dilute you, and they finance their companies this way. The other example is Palantir, which for the record, I've helped people make a lot of money on that one because they didn't know what they're doing. But anyways, long story short, is there another example of the same thing? In a past life, I was at Oracle 6 years, and I knew their tech was legit, and I knew it actually was better than what I was having to do with internally. And what's occurring there is now they're trading at like almost a 500x sales to revenue. I think they're a great company, great technology, they're useful, and I'm not trying to dismiss the technology, but once they got included in the indexes, they can just do the share issuance strategy. So they can finance through share issuance because they can capitalize on the passive flows. And that's what's happening. That's why the stocks are going up. That's occurring, that's most of the stock market. And you can mix in, you start adding a lot of buybacks, corporate buybacks, and you add these kind of synthetic price movements. You really start just getting really fundamental about scarcity, value, just the same primitives you learn in like Austrian economics. Another element that's happening is now we're also in a private credit bubble, and this starts overlapping into the tokenized world. So in the private credit world, there's an information asymmetry problem. These guys are getting deal flow on a lot of the bad deals, and they're getting advantage on what's going on and what's good or bad before the rest of the market. So most investors, or if someone's in an LP that's doing private credit, they may not get the direct information access that when they try to get these facilities set up to help a mid-market enterprise get a loan. And this is a big problem. Today we're going to talk about a recent case that was First Brands. I believe they're like an enterprise that sold like small car parts, but this is the scale of this is truly massive. And again, remember, post 2008, everything went to shadow banks in a lot of this world. It's grown. Okay, so I want to make a particular note that they went to the private banks, or the shadow banks, primarily Apollo, right around here. It's publicly disclosed that they went short a year before, and then it's also alleged that they actually went short once they had the deal flow too. And then what do you think happens once the public markets started understanding basically their insolvency? It dropped, but then they buy it. It's like they push a distressed seller and then they get it. Common tactic in the private world, markets, financial markets. Okay. All right. Now I like to show this because there's a lot of corporate structure and corporate financing cases. You're not learning this in business school. If you're a banker and you have to underwrite this, how do you underwrite? Oh, imagine all the paperwork involved with each one of these entities, each one of these spreadsheets, each one of their ERP logins, whatever. And imagine having to make sense of that. It's a genuine concern from at least an information systems, information management point of view. So this is just an inherent structural issue to this. And thank you, Harry. Okay, so now one thing that happened along that same timeline with those credit repo facilities, and apologies, I'm making my text too small here, but this is actually when gold or oil went negative. So oil futures went negative once gold started ratio getting out of whack. For those that aren't aware, the gold oil metric is a good heuristic to measure the health of the petrodollar. So as you see here, it clearly looks like something's happening. And you can actually, I didn't add the charts here, but there's actually a way you can frame this where you view the Chinese money in oil versus our money in oil and how their currencies trade to commodities that paint another picture. Okay, so long story short, you're told you make 4% treasury, inflation, especially post-COVID, you're really making 1%. You're still getting pinched on all your living wages. This is fundamentally building a social and civic problem. And that's a very important detail because the idea that this is going to stop, I don't know how these mechanics stop other than what we'll talk about into the stablecoins. And then this is the Dutch disease problem. Because we've gotten financialized over the years, it's the same problem that happened to all those European empires. Our economy gets out of whack, and then we start misallocating our resources. It's just that's the Dutch disease. That's what happened in the Netherlands. So Bitcoin's an original message, 21 million. You can fully audit, verify it yourself. You don't have to trust a bank, no counterparty risk. And it's fundamentally based on the same cybersecurity you use to log in anything else you do. So the evolution of settlement speed. Now we're starting into the fun stuff. So that's enough doom and gloom, guys. Now we're going to get happy. So this is what we're talking about. Like, how do you actually build the economic development of the future with the technologies that are capable and what it can already do? And a lot of it's fundamentally the settlement speed. So there's a big concept in the health of economy. It's like the velocity of money. And then in crypto language, it's called T+0, T+1, and you're just talking about time to settle. So say you get ACH, say you get paid, it's got to take whatever institution you're doing working to get. Long story short, it takes too long. It takes too long. Those slow the cycle of money, slows your cycle of spending money, slows the cycle of paying your people, all this stuff. Another element of this is you're talking about way cheaper back office costs and operational costs. So the velocity of money, this is just a quick example I'll run through. Is say you have a retail store, they close $10,000 book of business on Saturday. If you're T+2, you're really not paying your people until, so they're closing their books. They don't actually have access to that $10,000. And it causes downstream effects about paying their people, paying their suppliers, spending money locally. And when these cycle times start getting cut in half, you're actually talking about double the economic activity. So it's just a very fundamental, simple primitive to economic development that the technology enables. And this is where you start converging the banker and the tech world. And the tech is there. It's really more just like a administrative state that doesn't want it. Or at least as fast as we probably could do it. Okay, so the velocity of money for capital allocators. Now when you're talking about a tokenized fund, so you will tokenize real estate. We'll learn a lot of great stuff with liquid acres. But also the point is you're saving a bunch on back office automation. All that back office staff, distributions, goes less than $100. You're basically, it's the whole NFT craze. People don't like NFTs. Imagine that NFT is your share in the fund that pays you out every quarter. They can pay you now dollars through that same blockchain contract. That's totally capable today. And actually in like Dubai, UAE, the stuff's actually moving faster. And it is happening here, but it just takes a bit more time. All right. Now the stablecoin treasury machine. Now this one's actually a really interesting point. I know Dennis likes this one, but basically the Tether is one of the leading stablecoins, USDT, and they own more treasury bonds than Germany. So the strongest NATO nation has less treasury bonds than this stablecoin company that's under the hood, plumbing, Bitcoin, Ethereum, everything else, and even all the perpetuals and leveraged activity. All right, and just example here is like for retails, you know, you can't really see it that well, but you're talking about a CD, you're getting 4%. Coinbase, I can get 4.25% on my savings without a CD. And then even now there's some neobanks, you're talking 10% on just savings deposits. So what this is ultimately doing, it's for the U.S. to survive and extend its time, we actually have to extend digital dollar dominance. So we have to flood the world with digital dollars. The digital dollars aren't going to happen through them opening more JP Morgan accounts. It's going to be them having a smartphone and a wallet and just using the blockchain to transact. And it's actually better for your security because you can just control the keys to your wallet a lot better, or the security to your device better than if you just get locked out or your bank doesn't let you transact. So there's a liberty element there. And here we're just talking about emerging markets that it's very evident this needs to occur. Okay, so the tokenization megatrend. So the main thing to note here is the rate of change. Rate of change. Stablecoins, we're at roughly a little over 300 billion. And then the second largest tokenized asset market is private credit. And as you can see here, a lot of this private credit, and then after that's actually treasury debt. So it's actually these same private credit guys that are tokenizing their debt because they're de-risking. Okay, so just some fun facts here. I'm not going to go into it because I know I'm taking too much time. But long story short, where we're at today is, and we're getting signaling, is out of Basel. They're planning actually more Bitcoin accepted as collateral. It's just a very simple, neutral, global collateral that's liquid. And that's it. There's a lot of commercial loans getting done where they're using Bitcoin as collateral. And a lot of the math is that as long as a note is longer than 5 years, your chances of losing money on Bitcoin after 4 years is next to 0%. So this is just math. At least historically. I don't know the future. And anyways, so look at all, and what we're paying out here, now the estimated growth in tokenization up to 2033. So this market's just going to keep proliferating. Again, they already know this in Washington, D.C. This is like what Howard Lutnick is doing for Trump. This is why the crypto caucus has gained such power in D.C. actually in just recent terms. This is why they're having the North American Blockchain Summit at SMU the past 2 years running. It was in Fort Worth the year before. That's actually when we started the DAO, fun fact. They were going to do the DTX DAO, and I was like, why is there no Fort Worth? And I just couldn't let that happen. All right. Anyways, what we like to show here is there's actually a ton of opportunity. So if you're just rising tide with this, you're growing with the future of the market, you're growing with the liquidity, and this is what people have to wrap their heads around. Is like, would you rather grow on this, going up to be equivalent with the stock market, or are you going to ride on the stock market that's 70 trillion and the leverage is arguably a lot worse, or ride this over a longer horizon? Again, we're not financial advisors. But again, every asset class, everything will be tokenized. These are just assets. You're even talking about in like supply chains where tokens won't even be just like securities or assets. You're talking about tokens for like supply chain tracking, chain of custody, transfer materials. It's not like a token needs to live forever. It's just a profile helping provide provenance. So a lot of the blockchain technology, it's like audit trails baked in, it's provenance baked in, and that technology, and we'll actually learn a little bit from Bayer's dev about it today, and Angel here, is that this is just a primitive actually to national security and Space Force and Air Force. All right. So again, just recap, I think that Fort Worth is fundamentally capable of mobilizing rapidly here, or at least starting to integrate this as a mental model strategically, redefining theses, perspective. We have an opportunity to just make things less complicated with paperwork and just start talking about technology primitives, and actually more importantly, who's going to build it. So anyways, long story short, you can just do things, just build things. We need more young people building things. We need more old people building new things. We need people not scared to build things. And that's fundamentally our message, and that's why we're doing this, because a lot of this we're actually asking for help with our hackathon we're planning. So I like this image a lot because a lot of this is actually like a Chinese competition about we don't have in a lot of core critical engineering disciplines, we just don't have the volume.
So I'm Dennis O'Neill, and I was introduced actually to Bitcoin back in 2015. And I was very impressed and thought, okay, this is going to put the first last and the last first. And later on in 2015, I was introduced to Ethereum's white paper by Vitalik Buterin. And at that time, I realized what he was trying to do. He was trying to take the Bitcoin blockchain and take it a step further by having programming language incorporated into it with all the benefits of Bitcoin. And I thought, I want to be part of that because this is application development. And in there, in the white paper, was the first time I saw this term decentralized autonomous organization, a DAO. And it was an idea that you could run a company through program parameters. And it made so much sense to me, especially if the employees, if it were a company, or members, if it was an association, actually had input into how that organization was run. And so now, that is my focus. My focus is on decentralized autonomous organizations, and I am a part of working group pilot for the UN IGFDC Dynamic Coalition for DAO development. And I also am putting Robert's Rules of Order, actually it's in beta, Robert's Rules of Order on blockchain. So we're taking what we see done on the Senate floor, now available to anyone, any organization, to be used in taking, again, all the benefits of blockchain. So that's me.
Yeah, Dennis is a rock star. All right, Angel?
Thank you. All right, my name is Angel or Angel Ribo, Angel Ribo. It's not that Tobalo's ancestors and my ancestors talk to each other, but I'm originally from Spain. I'm from Barcelona, for those who like soccer. I'm a member of FC Barcelona, for whoever wants to know, and I can show you my actually membership card. I have it with me all the time. But I've been in Texas for 15 years. I worked with American companies since the 1990s, and I'm working with Virus Dev. Virus Dev is basically, Virus means Buenos Aires, for whoever has been in Argentina before, and Dev means developers. In 2009, two very smart engineers in Buenos Aires said, hey, we have these incredible engineers, software developers, software engineers in Argentina that might complement the talent already existing in the US. They moved to Silicon Valley. They closed a deal with Google and many other companies, and that's history. So today we have 5,000 employees. 4,000 of them are basically Latin American-based software engineers. And we got into this conversation with Tobalo just coincidentally a few months ago, and we immediately saw that we're doing similar things. We've helped companies, we've worked with large financial corporations, we've helped companies build chain platforms, cryptocurrency platforms, and whatnot. And we can do that because there's something extraordinary that the founders of my company did. They said, we're going to build a second-to-none recruitment funnel for the best top 1% software engineers in Latin America and put them to work in the US. Right now, we are screening over 200,000 applications from Latin America every single month. So you can do the math. And that allows us to really jump into any single kind of project, technology project, that companies worldwide put in front of us. And obviously, when we were talking and discussing about different projects, let me just mention a few, besides what I already mentioned regarding the financial industry. For obviously, Rolls-Royce, it became famous because of the cars, but actually they sold the cars to BMW in 2009. But Rolls-Royce is a big, massive, UK-based industrial conglomerate. They didn't dare themselves, this massive multi-billion-dollar or euro conglomerate, to build their own app to monitor their nuclear power plants real time. we did that for them, just to give you an example, okay? And another example, we work here in the US, not only with the Silicon Valley-based companies, we work with a lot of PE firms and VCs in order to develop their MVPs as fast as possible. We work with Booz Allen so that you can figure out the kind of clearances, the kind of experience and compliance restrictions that we have to abide by. And basically, I'm here just to share my experience after having done business with American companies since the 90s in 33 different companies. Thank you.
All
Countries,
right.
excuse me.
All right, Wes.
Countries.
Oh, I'll be a man of few words compared to these guys. No, Tabalo, a great overview when we first got. I came into that at 2019, and we just set out to solve a problem. And that was there was 20,000 tokens being created. Some of them had value, some of them were backed by tech, some of them were backed by some guy's good looks. And so I set out just to be real and to back it by land. And that was our first goal. And we first argued with the security, is it a security or not a security, for a little while. And we just went towards the security route to avoid getting sued 2 years later. And that was all we set out to do, to really, the first goal was to not be a pump and dump. I didn't know where the crowd was on crypto, but my job as the CEO has been to simplify this crypto process and what we're trying to do. So,
Yeah, thank you, Wes. So that segues good. One thing that I actually really appreciate about Liquid Acre when I started first learning about it, I think Bobby came and then he dialed you in, and then Bobby's actually been one of our strongest members and shows up and contributes. So it takes a village. So again, thanks to all the DAO members and the team. But one thing he reminded me that when you guys started, a lot of it was like exploring how tokenization, NFTs to crowdfund for missions. And then there was like a development in San Angelo that really helped do these things. So if I would just give you the stage to help paint that story on that journey in the early stages of Liquid Acres, because I think that's really key that it actually came later, the real estate, more so from missions.
yeah, I come from a Jesus-loving background, and I'd worked as an outreach pastor for 10 years, so I was always trying to find employment for people or bring in income so they wouldn't starve, and how do you support the mission? And the missionaries are always bumming and asking for money, and it just didn't feel like the gospel. Paul was a hard-working, Jesus-loving, so I was just like, how do we bring this to the people? When I first fell in love with crypto, I saw how you could invest in something new and get those crazy returns. I was day trading and always reading white papers.
We all did that, yeah.
Yeah, so you're digging through white papers, trying to find value in these new companies. I was excited. I wanted to help. I wanted to get some young kids to invest and so they could pay off their college by the time they got out. Not this quick return, but like a 4 or 5 and 10-year investment in their lives. Pay off homes instead of starting out in debt. That was my first push towards crypto. Later, it was like the pump and dumps, the scams, the people listing coins or tokens without value. It was almost annoying.
Yeah, Dennis here was a blockchain consultant during that time. The
ICO.
Yeah,
Yeah.
so there's a lot of legal before. Now it's a lot more mature legally. Yes. So Wes, tacking on to that, like he's talking about how, and this is one thing that we've actually done thought leadership on with the Forward DAO, is that the legal frameworks, and Dennis is spearheading this, but the technology applies equally to nonprofit, mission. It's the same technology. So that's one of the things that our system still hasn't wrapped their head around, is it's the same fundamental financial technology for missions, for philanthropic organizations. It's the same financial plumbing. So how one gets classified as a security or token, again, it almost gets to a philosophical point of view. But kind of with that said, and maybe you could share more with the audience, and I'd love to learn more myself, is I think Bobby explained to me a lot of it helped. There was something happening with a building in San Angelo or a restaurant that needed help getting money together. And so please tell the audience about that.
That's just the initial kickoff. I had a good friend that was selling just shop for 600 grand, and I said we could get 600 people together and pitch in $1,000 each and buy this thing. And I was sitting with my crypto trading friend, and he called me the next day, said, we can build this. And so we knew a couple of developers. We were in the space, and I'm a contractor, roofing, painting background. I've owned a car lot. So I just come from that entrepreneurial background. And so I was like, we just set out to build it. Found the best developers we could afford at the time, and tried to keep it really in-house. I think originally it was going to be a large Texas project, and then the SEC started coming in and passing out lawsuits. And we ended up getting licensed in El Salvador when they legalized Bitcoin for that reason. Got our exchange license, got set up, so we really tried to be regulatory compliant the entire time.
Yeah, so if you guys hear that and you're talking about regulatory and compliance, talk with Wes. He knows what's going on.
Many lawyers.
Too many. Yeah, that segues well, and it's like showing that tokenization and this, as a crowdfunding mechanism actually had economic development impact in San Angelo. That segues well to where we really want to showcase governance and the work that Rob's Rules DAO. How do you govern these assets? How do you govern this money? And I think that kind of tees it off to how should people be thinking about whether it's you're governing in the Robert's Rules of Order way of DGov, but also how a DAO applies in the investment sense. So ultimately, it's similar voting mechanics that are following different level of parameters, so your different quorums, but the same way you get issued by your securities to go vote, like the big Tesla vote about Elon's $1 trillion pay package. There's no reason that couldn't be blockchain.
That's right. The decentralized autonomous organization lends itself really well to tokenizing real-world assets. And because that does oftentimes require participation by the owners to come in and say, I want this done, or I want that done, or this is not the way we want to go, and to let the majority rule. And that's the decentralized governance. And that is what I'm attempting to do with putting Robert's Rules of Order, using the Vokdani blockchain actually, on blockchain. But when we take a look at that, to understand with a DAO, what can happen is that people will vote, and there are many different ways. You can delegate votes called liquid democracy, use Robert's Rules of Order, many different methods of governance can be used during the voting process. But at the end, a smart contract, which is a misnomer, it's really a program, but a smart contract is executed, and it literally will execute whatever everyone agreed to. And everything then is stored on the blockchain immutably, can't be changed, can always be looked at. It's interesting when I go to vote here in the state of Texas, and I ask what website I can go to make sure my vote got counted. There is none. And it's like, what? So being a blockchain advocate, I really am appalled at that. But that does not happen in a DAO. It is all open, and that lends itself so well. And we will see more real estate being tokenized, not only as Wes is doing, but also the federal government and so on, because ownership will become very important to us, I believe, within the next 5 to 10 years. We will want to have assets, and we will want the ability to get these assets easily. That would be a tokenized asset, a token of that asset, because we will want to borrow against it. And this is really the direction that I believe we are going. And so everything that we're talking about here all links. All of these dots connect.
Yeah, so just in advance, I'm not looking at TikTok dances. I'm just making sure I have what I'm going to ask them properly, because to take advantage of their brains and educating you guys. Yeah, and a little bit of cat videos. But Dennis, kind of on that note, I think one thing that I know we talk a lot personally, obviously, because we're close building to the DAO and we're that mission of civics and education and digital sovereignty, and there's actually like a cyber defense level to it. If you're hacked out of your phone out of a nation state that's China or Iran, your local courthouse is not going to be able to do anything. And that's just a fact. But helping the audience understand what you've seen like on the ground inside the Government Blockchain Association, the challenges you've seen with this government lens of it versus what your past experience seeing building DAOs, blockchain consulting, ETH Denver, and this kind of cultural difference of traditional management, new school management, and then how these kind of DC minds and this UN minds are thinking about this compliance, right? Because not everyone's putting American laws as they're thinking, but yet they're thinking of this out of DC. So if you could just share what you're observing.
Yes, that's really a good question, because when people hear about decentralized autonomous organizations, there is a thought that, like all the employees, only they would have control over the company from day one. And that's actually not the way to create a DAO. If you were to create an organization, a company, as I have, Rob's Rules is a DAO.
And we've showed people at TCU, we've held several workshops, we do these live. Yeah,
yes, we actually create,
you can do it
we
fast.
have conferences, and then we actually have all of the members of the conference become a member of a DAO for that conference. Think about that. It's amazing. But a DAO really needs to have a charter. And I veer away from the term bylaws, because when you look at a DAO, it's much more like a guild. It's more like a government entity than it is a company. So we get rid of the CEO and the vice president and the directors and all that structure.
And the
we
technology
import
doesn't care about the paperwork.
it. No, exactly. The technology works that way. It'll work any way that your charter wants it to work. So you start out centralized and then gradually fold over and disperse the control of your organization, which, by the way, could be your homeowners association, could be a company, could be a multitude, an owner of an apartment building that's tokenized. There's endless possibilities. And so you enable the members with governance gradually as they learn and as you learn, and so you start to disperse that. So that's a very important point to know. And then there's another point that I would like to make, and it goes along with it, but that is the legal wrapper. We have to acknowledge that we live in the traditional system, right? We are a country of laws. For instance, the Fort Worth, Texas DAO, which is a DAO, we meet every Wednesday. Everyone's invited to come at noon at Create Fort Worth. We meet, and we are a DAO ourselves. So what we're doing now is we are incorporating as a limited cooperative association, an LCA, a little different than an LLC or S Corp. It's a new designation, and there are several states that are recognizing DAOs to be their own legal type kind of formation. And so that's also important too. You have to bridge into the real world because you need a checking account. The DAO has a treasury, probably holding USDC, maybe some Bitcoin, but eventually you're going to have to pay here and probably in US dollars. So you may have to make those transitions. I really think that over time that's going to go away, but probably 20 years. These are the different governance considerations. And we approach these every day, and we work together as a DAO to solve these issues for ourselves.
Yeah, and a lot of the legal arguments around this, it goes into this deep subject of code is law, code is speech, and if you code privacy technology, that's an expression of free speech, and there's really important legal battles happening at the federal level on this matter. But it's a good segue, and just to help paint that global sort of tying to the American system image is really good, so thank you, Dennis. But I think that segues good into showing how Latin America plays a role in this, and then probably just helping Angel here help us understand these trends happening both within consulting space, the transformations related to financial companies and enterprise blockchain, and some of that kind of security elements of it. So,
Yes, thank you. So I like to, probably we all have had, or we still have jobs and we report to someone, right? I don't know how lucky you have been with your bosses in your life. I have been very unlucky, but I also have to be very thankful of that. So I had to really stretch myself really thin to learn lots of things. One of the worst bosses I had, that's a true story, actually, he was account manager for Boeing, needless to say, there's no connections there, but what I learned from him was, one time we were having a meeting, all the team, and he said that he really liked unconventional knowledge. And I'm just that guy. I'm always in search of unconventional knowledge. A couple of months ago, at the Love Field Airport, there was a flight museum. There was a national security event. I don't know if anybody attended that event. And I went to that event, and I listened to what these guys were saying, and I was able to meet with the president of Textron and the CTO of Lockheed Martin and lots of four-star generals. Why is that relevant? Because they very clearly said, and there was an entire day of speeches from these people that have this worldwide vision. They were all saying how important it is, economy, for the national security. For national security, how important the economy is. What we are doing today and what we are discussing today is paramount to national security. And you would say, what is this pioneer? Originally, someone from Barcelona has been in Texas only for 15 years, talking about national security. My uncle was actually a 3-star general. It's the maximum in Spain. In Spain, there's no 4-star generals. But I was always, since I was a kid, really like having these thoughts and thinking in a planetary basis. And I've always been concerned about that. And as I said before, I've done business in 33 countries. And I lived in Latin America for 10 years, actually, in Mexico. And I was always working with those large American companies. And national security was always something that would come up in those conversations, always. And how a term came up, which is friend shoring. You've heard of offshoring, you've heard of nearshoring, and then at that national security event, this term came up. Friendshoring. What is friendshoring? Friendshoring means that in order to secure your national security, besides obviously being concerned and focused on developing the economy of your country, you also have to have those allies somewhere else in the world that will allow you to achieve those places. And like it or not, you mentioned that before, there's a talent gap here in the US. And what best than having people already in their countries becoming economic developers of the economies of their countries and supporting the American economy. And let me give you an example. We at VirusDev, we have engineers in 50 different countries. There's software engineers working with Adobe projects or Google projects or Booz Allen projects, and they live literally in rural areas in Latin America, rural areas. Can you imagine what that salary represents to that particular rural area? Humongous. And they haven't had to move, they haven't had to come to the US, they haven't had to go through everything. I'm not going to make any political point here because that's not the case today. But we are all here to do something, right? We're all here to, how can we improve the economic development of Fort Worth? I'm in Plano, I live in Plano. I have 2 kids still in the school district, 15 and 17. And I really want them to be international universal citizens. I want them to really contribute. They speak much better English than Spanish, as you can imagine. They've been here for 15 years. And I really want them to contribute to the US economy and keep on improving and contributing to the national security. When we are making all these instruments, or when we are making all this liquidity available, and we humbly at VirusDev are able to build the plumbing, and you mentioned the resources that you had at the time, This is exactly what we're doing. We are contributing to national security, and we're contributing to the economic development today at Fort Worth.
Yeah, powerful stuff. A lot of these are tectonic geopolitical shifts. Like we're getting out of this, there's this kind of resettling of the post-World War II to a multipolar world order. A lot of that is just thinking we're directly competing with Chinese influence in Latin America and South America. That's just the fact. Again, goes back to the digital dollar proliferation. Along those lines, I think that goes good into asset tokenization and explaining back to a strategic level of how people are crowdfunding and how even like real estate tokenization is already a fairly mature or growing in maturity ecosystem. So I guess, Wes, for you, if you could help paint the picture of Liquid Acres, what you guys have figured out through that regulatory compliance work, how real estate is getting tokenized, and just share your wisdom and experience and scars with the audience.
The scars have been 4 years for us to get to where we're at today. And I really didn't expect so many lawyers in so many different countries to try to get this pushed through. But now that we've gone this route, I see why all these are in place to protect the investors, sometimes to overprotect, but there are so many scams, even in real life with real estate. Fractional real estate was a scam 30 years ago in Texas. I think somebody sold a square foot to everybody, and they went to go build their house, and they didn't own the acre that they thought. Now in this world where everybody was going to be renting and going that route, I felt like, I don't know, maybe with ownership is where you really start to take care of things and protect it. And that's where I felt like the ownership, group ownership into these projects, people would sow into it and take care of it. And as it earned revenue or whatever it did, it was written to the smart contract. It would always go back to the token holders. So it was just a system that would be for everyone. We would all win together.
Yeah, this efficiency element, again, is a key point, right? Technology efficiency for economies. And one thing I think is probably would be good for us to learn here in Fort Worth is you and Bobby are originally from San Angelo in West Texas. So I guess I'm genuinely curious of the tokenized real estate tokenized real estate in the concept of like a landman would think about it. So like real estate, mineral rights, these royalties that get swabbled up. And I'd be genuinely curious from like a West Texas perspective, how you guys have perceived that, how that has evolved, or how they're thinking about that out there.
Originally, it started out just to own the land as the value, and then it became to develop on the land. We could give a 2x and a 3x, and then we made partnerships with energy companies, bringing in renewables and waste energy projects, those, and earn a ton of revenue. And so the project can just build as everyone funds it together. We were, in the easiest way, going to be just like a real estate investment trust. But we were going to fractionalize it down to where people could invest a couple of hundred instead of having to be the 10,000 minimum. But nothing more than that. Just keep it simple. But the aspect of real estate is very lengthy. Finding the development, buying the land, all of those things take...
The actual work.
Yeah, the actual work of it takes months and years. And so we found trusted developers and land, distressed properties that I can get for pennies on the dollar and things like that. Hurricane-ravaged countries. So there was just ways that we could bring in the investment and then pour into an area and make it more beautiful, bring in the development, bring in energy. And our offer to all these small countries especially is that we're going to be bringing resources from around the world and putting it into their country. So we're not going to their countries to take their resources, we're going to be giving. And so all the energy and production and jobs that are created are in their area. So it was...
Yeah, so powerful stuff here. We definitely want to I think we want to have ample question time, but I want to close this out here, and I want to have you guys just from throughout your years and the themes of what we've talked about today, and try to untangle the wires on how stablecoins, crypto, NFTs, pictures of monkey, cat pictures, whatever, that are tokenized. Like, just share what your most important things that you think are important to understand that maybe you wish you learned sooner, or what you'd want to share with someone that should know along this theme. So we'll just go down the line here, and then Dennis, if you can go first.
Okay. So just some of my thoughts and I like to share, because some of it's tidbits. I really enjoyed Toballo's presentation this morning. But to go into, again, stablecoins and how they are purchasing treasury bills. As $38 trillion in debt. So one time I was really quite worried about it, and I can tell you from my perspective, my personal opinion, we have problems, that isn't one of them. And since the stablecoin has come in to cause liquidity, and so now he mentioned USDT, but if you look at all of the stablecoins together, we are approaching it to be 10th largest owner of United States debt. So that causes liquidity. They'll always have somebody to sell it to. So that's a good thing. So anybody that's thinking that this marketplace is going to go away, no, it's here to stay. But then you go into the other direction, say the application use of it, and then you see the social benefit of it and the democratization of decision making that is available through what we call Web3, which includes blockchain, the blockchains, and so on. It's just enormous. And we are going into a reset. It is happening now, in my opinion. It's happening now. And it's just going to be more and more obvious to everyone as it continues to unfold. But the people that are in control, they are executing a plan. And we're going. So it's very important, I think, all of you must understand. That's why you're here, is to learn more about it. And that's all we really, and I've learned a great deal. I learn every day. And so that's what we need to do, is keep learning.
Probably what I would like to share is that the technology to make all this happen, the technology to make sure that we're able to tokenize many more different assets, and in order to be making these decentralized decisions, the technology already exists. If it's not happening, it's just because maybe we're not looking into the right direction. And the talent already exists too. As you probably remember, what happened with Amazon Web Services only a few days ago, right? Today we actually had a few thousand people attending to one of our online webinars regarding how to not depend on AWS outages in order to make your business thrive. This is just an example. But let me tell you, the technology to avoid what happened, to prevent what happened to AWS already exists the same way. I don't know if do you know what happened yesterday with Cloudflare? I don't know if you know what Cloudflare is. Okay, so yesterday there was this big, massive disruption in technology. Cloudflare is one of the companies like that. I think that.
Yeah, I use that. My app was down, but it's a good excuse.
Exactly. So all this technology already exists. Those two gentlemen sitting next to me, they're visionaries. What they have been doing for the past few years is just outstanding. They are ahead of the curve, but the technology already exists. It's just a matter of having the right vision behind it, having the right talent, and executing. And probably if there's something that I would have loved to know before, in the last probably 10, 15 years and traveling internationally, lots of people were coming to me and asking me, what's happening in Europe? How is cryptocurrencies, blockchain? What's happening in Europe? I go back to Spain every year to see my parents. And you saw Spain, this massive economic domination throughout the history of humankind. Unfortunately, Europe is going downhill like big time. People keep on asking me, will you retire in Spain? And my answer is always the same thing: over my dead body. Always, all the time, as much as I like Europe. And again, I go there.
You'll go to the beach.
Excuse me?
You'll still go to the beach.
Maybe to Ibiza because I love house music, but that's the only exception. Just to be, but the point I was trying to make is listening to both of them, I hear principles, I hear values, I hear trust, I hear working with people that deserve our trusts. And I think that it's incredible what we can do with technology, again, to make our country even better. The last anecdote, I went only a couple of months ago to the Medal of Honor Museum, which is not far from here. And there was someone presenting his book. I don't know if anybody remembers the story of Stan McChrystal. Does anybody remember Stan McChrystal? What happened when he was running Afghanistan and some people from his team was saying the wrong things, and that President Obama heard what was happening, he had to resign. He presented an incredible book. I really advise you, if you will, or suggest you to buy it. It's called On Character. On Character. I think it's extremely relevant to the discussion we are having today, because all those technologies are really contributing to making our country much more character, value, and principle-based.
No, thank you for spending some time with us today. I think the trust factor is going to be huge in this space. That's what we really started to depend on. Yeah, thank you.
Yeah, so again, we have a community here. We have the Fort Worth DAO. So get involved. And again, really the main thing before we open to questions is we are asking for sponsors and strategic support for our hackathon that we're looking to host at TCC here downtown. So we're trying to make competitive and then also broader end inclusion and seeding of people who can build products in convergent technology, data engineering, additive manufacturing, advanced engineering, all with the leading with Web3 civics and education and as our guiding principle. So if you guys believe in that, or you think your children should be a part of hackathons, let's figure this out. And you would think there would already be more of this here, but there's not. But we've already got the ball rolling. I think what we're gonna do here, Harry, if you can run the mic, Dennis and I will share a mic. We'll open it to Q&A, and if there's any questions, does anyone have a question? Don't be shy, it's okay. All right. I think it's good.
I guess I've done a lot of research on, is it a Reg D filing with the SEC? Is it, I guess, can you, and I don't want, I'm not asking for any confidential information, but as like far as like from ideation to implementation in the marketplace, you shared there, I'm in the oil and gas business and the mineral side, and so I see a lot of value of what you're doing on, and it could be into minerals, it could be into renewables, et cetera. But I guess, how did you navigate that landscape of, hey, there's a $600,000 building we need to buy, to building what you've built? Is there some just tangible steps that you took that were like, yeah, this makes sense? And I know that you've hired a lot of lawyers.
SEC lawyers, right? Just writing our first PPM, getting that processed was, I think, our first feat. But yeah, we started to go the Reg D, Reg S for everybody. It took us a year to find a broker-dealer that would take us. We began buying land and building, and we started building the software while we were still talking to all the lawyers. There was months where the lawyers were working with our developers, and then everything that we were to even talk about, we didn't share on social media for 2 years for fear that I was going to get arrested later, or just by saying the wrong thing. And then everything kept changing so much, we were like at a constant pivot. And we kept raising. I found one investor that just was behind me 100%. So he was like, let's do it. And without him, I probably wouldn't have been able to do it like we had been able to do it and really go towards the lawyers, because it was, you'll realize why people don't do it, because it's hundreds of thousands of dollars. And 9 months, 12 months before you find out a yes or a no. That was our route, just good old-fashioned Reg D, first start. In fact, we barely got that up 2 weeks ago, and we haven't made the announcement, but we just now got our utility token offer finalized. Yeah, yeah, thank you. Sheesh. Here's a feat.
Yeah, so exciting stuff. I think to piggyback, the plumbing is there. It's usually just getting onboarded onto a prime brokerage. So Circle is the main one people are going to, or you're just going Coinbase directly, but it's USDC, so it's still Circle. That's when you start talking those larger sums of just getting on ramp properly, and then you can start moving money or organizing it at a larger swath fairly rapidly. Any other questions? Any other questions? Chico, would you like a mic or no? Yeah.
Brother Paulo, first, thank you for what you're doing. Gentlemen, what you have is in some ways proof of concept. And of course, the structured DAO is something that was first piloted in Austin with the census. Did not work. But in the ground up, kind of grassroots manner, it did. And solvency usually comes from its voting block of those who hodl. What I'd ask you to do, if you could style a response, is to conceptualize how a city and its working budget, or its ability to debt finance capital inflows to finance projects, could become a working partner if and when you have the right folks in positions to work with you.
Dennis, I think if you could share, one of the first things we actually talked about was like public library financing through a DAO. So maybe you share your perspective first, and then I'll go.
I do believe that cities will use it as they proceed. As a matter of fact, there was just an announcement, maybe yesterday or day before. New Hampshire did their first municipal bond and through Bitcoin. What I think is going to happen is that a city will look at a project, let's say in a library, and instead of going out for a referendum and then the municipal bond and all of that, they could very well create a DAO for the construction and management of that new city library. And then the people that are actually using the library would have tokens that would give them the ability to, of course, check out a book, but also have input as to, we want some senior events, or we want more daycare meetings, and so on. So they would actually have a say in how that library is run. And I believe that will continue. But also homeowners associations and so on. So we'll see it be not even in the city, but I think that will happen. And then eventually, on into the future, it will become a model for the city itself. But I believe it'll start first with projects.
My 2 cents on it, right? And I'm a young guy that I'm not going to slow down because I have a we need to move fast mentality and execute and deliver. So fortunate for us, the great state of Texas is leading this nationally. And we have laws here that are already designed to help us. The state of Texas already passed SB 21, which the state treasury can invest in blockchain assets that are over $500 billion in market cap. So I think as long as a city and understand the larger populations and the sort of the city council dances have to do what they do. But the long story short is we have actually the right laws in place to accelerate in Texas, ideally. Now, again, so at the federal level, we already know what's happening, and there's ideas floated around about a bit bond, longer time durations, but the fundamental view is the technology is the same, whether it's a city in anywhere or even a larger federal entity. I think it's fully capable, like the bit bond idea, like I think a city could adopt that. Bitcoin is legal, like in Texas we have these privileges that a city inherits. I don't see why there's a lot of people are getting just really confused with all the laws and stuff, but I think it just takes a lot more cavalier spirit to just push that rock uphill like Sisyphus. So, any opinions on that one?
Think about settling debts for your city in seconds.
Yeah, right. Exactly.
And I didn't have a ton of money to have to manage, and I didn't really start investing till I was 42 in my life. But working internationally, like the banks are working themselves out of a job. They're closed all the time. They close every holiday. And like, well, with our exchange, we're open 24 hours a day, 7 days a week. We take 150 currencies, and we have staking options on 15 of them. No bank offers that. So it's not going to be. It's just going to be the way it is. I can send $1 million, and it takes a fraction of a second. Literally on my exchange, I can send myself XRP before my windows close. The money's in my account, and it's my wallet. And so they're going to use KYC and AML. You'll know exactly who's coming in your town, whether they have a record or not. The digital ID is coming. Everybody has an ID, and so it'll.
Yeah, so like in the city of Fort Worth's case, like financing a 1.5 billion situation is, you could just really think about it. It's the same means of pooling the money. You're just thinking of it more in a blockchain lens, and the liquidity in the dollar side is there. And like if we see all these private credit that are token, however they're moving dollars like that, there's probably a playbook in play. But I could just speak from like an IT tech guy. Like, how would I actually push buttons to do it? You're selling a tokenized credit. You're selling a tokenized bond, and they already have. And Treasury bonds are already happening. That BlackRock is doing that. Biddle. So I don't think it's something that has to be really not possible. It's totally possible. It just, will they do it? All right. Any other questions? Don't be shy. It's okay.
I've got one. First of all, Tomo and Dennis, thank you for founding the DAO and having the vision to do that. But if there's any call to action for people in this room, first of all, thank you everyone for showing up today. But these two gentlemen can't do it all by themselves. It's wonderful that we brought everyone here together. But if there's a call to action for the DAO specific, and then also leading out further to the hackathon starting in March and culminating in April, what would those things be?
Yeah, Harry, if you could put the link or show that page on the hackathon on Canva, he'll get that going. But it's a flagrant name, hack.fwtx.city. That's our website. I always find it funny because people are like, what are we? There's one guy that joined our meeting, like, what are we hacking? I'm like, we're not hacking anything. We're not breaking anything. And if we were good at breaking stuff, we probably wouldn't be asking for your money. But the point is that we need sponsorship, we need kind of strategic stewardship, and we need to have a farm of this through non-traditional channels. The specific ask is that we are working to get this operationalized for the first time in March to April, the primary 3-day closing about it. So if just helping spread the word, getting people involved, we have the right seeds planted, and we're with the TCU Innovation Network, TCC, one of these days they'll remember we're doing this. And anyways, so go ahead.
Yeah, and are you complete? I didn't want to interrupt.
No, keep
you.
going.
Okay.
I was just going to ramble.
Okay. Yeah, so I wanted to also talk about the Fort Worth, Texas DAO itself. And I did mention it, but we meet every Wednesday at noon at Create Fort Worth. It's on Bryan Street, right? 601?
It's right in the office next to Summer Moon on South Main.
Now, the key, though, is that when you come in, you can ask a question like, how do I use Exodus wallet? And we'll show you. We will answer any questions that you have. We have a lot of experience in the group, actually, and it's a safe place. You can come in and visit with us anytime, or just sit and listen and to what we're talking about too, because we're continually planning other events and so on for the Fort Worth, Texas DAO. But that's always open to everyone. Want to make that a safe and open space.
Yeah. If you're uncomfortable with wallets, you want to understand why Bitcoin is better than other things, why Bitcoin is what it is, how these other cryptos evolved and what they are, and just honest opinion. Yeah, so just show up. And again, but really the intent is to seed Web3 civic excellence and education, and we need builders. So you need technical literacy, and we need way more of it. So just having this system and culture of building will lay the foundations that will do it. And we want to make it competitive. If they do good work, we want to be able to reward them with cash prizes, and then even help them in the talent pipeline. Because what happens here in Fort Worth, and is a challenge in like the venture scene, is if you're a talented student at TCU, at least in the realms of computer science, you're likely going to leave Fort Worth. If you go to Stanford or Berkeley, you're going to get a super well-paying job, and you're not going to leave the Bay, most likely. So that element of like talent not leaving Fort Worth is a problem, and that's our effort to try to slowly make that better. Now, it's not going to happen overnight, but it's going to be helping people who wouldn't have access to these things learn how to use GitHub, talk with people who would just be scrappy and tinker and figure it out, and then also on the top end, like if someone gets really identified talent and they need it's a super good founder profile and they can execute super sharp, then we need to recognize that and help that and identify it early and often and just build. So yeah. All right.
Yep. Tabal, I'm going to pick on you a little bit. Can you tell the room about our last hackathon and why we were having it and what we were working on?
Yeah. So for everyone who doesn't know, that's John. He leads Fort Bitcoin. So we're partners in crime here on this, evangelizing this industry, at least here. And one thing that we did with John is he was working with TCU's information systems school, and they were talking about how you could do automated reconciliations and settlement of natural gas on the meter in real time. So how do you actually like change the settlement period for a natural gas contract to be as close as possible? And throughout that process, I was the only one that showed up. And I was like, and I helped him build it. I wrote the initial code. And for the record, this was before ChatGPT, right? Yeah, so I knew how to code before ChatGPT. Just for the record. No, you do use it a lot. I don't use ChatGPT. But I use Claude and other ones. So anyways, long story short is that work that we were doing and that John was trying to incubate with the information system school and Professor Slaughter at TCU was it's called Meter by Lightning. So how do you build these liquidity channels on Bitcoin to have these instant settlement on Bitcoin? And to us, it was clear the tech was there. There was just fundamental problems. I think one thing I remember is like the Henry Hub data is like updated like once a month, or it was like super slow price oracles. It was ridiculous. And then you start learning these things are like by design. But it just went stale, and then obviously there's a certain level of scale. But we did build a functioning solution, at least in a moderate way. It's just how do you have the two parties in agreement there? And we did get a good tracking on how that would grow, and that's evolved, and especially with Bitcoin-based tools of the trade, John's a great resource.
Do you want to share when you meet Fort Bitcoin? It's a very great organization.
We met last night, but
Want to make sure that everybody
every
knows
third
about
Wednesday.
you.
Third Wednesday, yeah, on Meet.
Where?
We
switch it around.
Meetup.com? Meetup.com?
It's a new place in Fort Worth every month. We try to get to know Fort Worth.
Yeah,
Yeah.
it's more of after hours. This is more of the grapevine juice.
That's right. There are great organizations in Fort Worth. We have to continue to utilize them and support them.
Yeah. Any other questions? Going once, going twice. All right, we'll just break out. I think there's more food. Feel free to eat more food. We'll be hanging around, closing shop.
Thank you
And
all.
again, we're not uptight. As you see, I'm not wearing a suit. So yeah, thank y'all for coming today.
Thank you for coming.